Indiegogo and the other companies that are helping us find sourcing for our incredibly creative projects. It is happening out there. Now, to address this crowdfunding in the alternative energy industry, Catherine Austin Fitts is going to tell us some of the pitfalls of that. She knows money. Not just the pitfalls, but also the incredible opportunities, but it's a little bit different. Catherine is the former managing director of the Wall Street investment bank Dillon Read & Company, founder of Hamilton Securities Group, and the former assistant secretary of HUD in the Bush administration. Today, many of you know Catherine from her more recent role as founder and president of Solari.com, which is a fabulous site, where she brings the good, bad, and ugly of today's financial news, social engineering, science and technology, a vast array of other topics, and their solutions. Let's welcome Catherine Austin Fitts.
Isn't she wonderful? This is the second time I have come to Boulder. The first time was to do a TV show with this wonderful woman, Regina Meredith, on GAIM TV. Well, thank you very much for the opportunity to speak to you today. It's funny because I have tremendous experience as both an entrepreneur and a business person designing financial structures for people, but my real expertise is using financial structures to defend in complex litigation and politically sensitive topics. Let me just start off by asking, who here is thinking of using crowdfunding to fund their project? Okay, who here is thinking of using crowdfunding with securities to fund their project? Okay, so let me go back. Who here is thinking of using donations to fund their crowdfunding project? Okay, very helpful. I'm going to focus a little bit on simply the sort of political and strategic and business issues on financing these kinds of projects. And but where's my little gizmo?
Did your gizmo go away?
My gizmo went away.
Maybe it was swept up. Let me see if I can find it.
Also water. Gizmo, thank you. Okay, before I start, anybody show me how to use this? Okay. About 2 hours a day, I spend in investment committee looking at businesses from my day job. One of my day jobs is a money manager. And the first thing I look at when I look at a business is who governs it, who manages it, who's involved with it in a variety of different ways. And what I will tell you is the single most important thing you can ever decide in business is that there's no such thing as being too picky about the quality of people that you do business with and the quality of people that you work with. And I just have to tell you, if you work for GlobalBEM, or you're here as a volunteer or staff, or the new energy movement, would you please stand? And if you're one of the speakers at this conference, would you also please stand? Okay, what I have to tell you is this is one of the most marvelous groups of people that I've ever had the opportunity to associate with, and I would just like... I can't, if you haven't yet, go to the website and start to read the bios and names, because this is an extraordinary group of people who've come together. And one of the reasons they've come together is that the owner of Days Inn has made it feasible, Derek Zurich. And it's really funny when your own called and said, we're not going to be at the University of Boulder, we're going to be at Days Inn. I said, oh, thank heavens. Okay, someone at GlobalBEM put up this quote for me. It's one I use every week on the Solari report. Don't worry about whether or not there is a conspiracy. If you're not in a conspiracy, you need to start one. And the reason I say this is I've never really heard the word conspiracy, but I grew up in a world where everything was organized around conspiracies. Now, that doesn't mean they were illegal or wrong, but everything was a group of people quietly got together, they made a plan. Conspire means to breathe together. So they'd make a plan, and then everybody would throw something in the pot. They'd throw in money, they'd throw in time, they'd throw in resources, they'd throw in network, and then we'd go implement it. And it wasn't until many, many years later when I started to talk publicly about money that I heard that conspiracies were a bad thing. So I don't think they're a bad thing. I think they're a wonderful thing. And I think if we want to change the world, we have to engage in thousands of conspiracies. And to me, crowdfunding is simply a technology that makes it easier to conspire together. Okay, I don't know, has anybody here done any financing on Kiva.org? If you've done Kiva.org. It does microloans for entrepreneurs around the world. I had a client in 2008 when things were really bad in the financial markets. She was gonna buy a Swiss bond, and I called her the next day and I said, did you get the bond? And she said, no, the interest rates had gone negative. So in other words, she would have paid the Swiss money to hold her money for her. And she said, so I went to Kiva and I lent it all out to entrepreneurs all over the world because at least then I know I'll get it back. Anyway, so crowdfunding is really a very old thing. If you look at how civic projects and many businesses are done in communities throughout America and the world, they're really done by groups of people getting together and throwing in lots of small amounts of money. If you look at what's called a partnership or hand, how most immigrants finance a lot of their activities and businesses in this country, it's with small amounts of money getting together in a group and financing something. But one of my favorite historical examples is the Statue of Liberty. And this is a very popular story about crowdfunding. When the Statue of Liberty was going to be brought to America, there was a real failure in raising the money they need. And finally, Joseph Pulitzer, who had the newspaper chain, went out and asked all of his readers to please donate money. They got over 120,000 contributions of $1 or less. And that's how they financed the final $100,000 to do the Statue of Liberty. It's a perfect example. But of course, what we know is that new technology makes it much easier to do. So I just want to give you some statistics, which I love. This will show you the increasing irrelevancy of Washington. Last year, the National Endowment of the Arts gave $146 million to artistic projects. Kickstarter funded approximately $323 million. Okay, so blown completely by taxpayer funded. And I think that was raised from about $2 to $3 million, 2 to 3 million donors. So it's quite extraordinary. We estimate in 2012 it was approximately $3 billion globally just for donations. And usually there are many different models to use to crowdfund with donations, but typically someone gets back some kind of gift, or if it's an artist making a documentary or a DVD, they get a copy of the DVD or many copies of the DVD. There's a new, want to turn it back? There's now a new website called Credibles where you can finance food businesses with pre-orders. In fact, I just did a term sheet for, you want to get back? Hello? Can we get the slides fixed? Does he need to, do you have the power plug in the computer? Just make sure you have the power plug. Now let me just stop here. There are many models, donations and pre-orders to businesses. Credibles.org is a new website that does pre-orders for food, which is a great way to start local food businesses, I think. And I expect this sort of explosion of money to just grow and grow and grow. But one of the reasons this is happening is if you've ever studied the flow of capital, particularly in North America, what you'll find is tremendous amounts of capital are sort of organized to flow up from households and communities into Wall Street or into Washington and then come back down. And what is remarkable is, we talk about being a market economy, but we're not. If you look at the flow of capital that wants to circulate locally, it's tremendous. And what we've seen is regulation has continued to stop that natural flow from happening locally and put more and more rules, more and more regulations, et cetera. And to a certain extent, I think the Kickstarter phenomena is people saying, you know, I've had it. I'd rather just give the money away than send it this way. So what we're watching is a real tension between people who want to finance projects that make sense to them, including in their local area, and this desire to sort of control the flow of capital. And so what happened is in 2012, we saw the passage of the Jobs Act by Congress and signed by the administration in April 2012. And what it did was it said, okay, let's take the crowdfunding mechanisms that have been used like Kickstarter to do donations and let that mechanism work for securities. Now, I come from a county which is like many counties in the United States. Within a relatively short period of time, I can pick up the phone and buy hard narcotics drugs. I can go down to the local grocery store and spend all my savings on lottery tickets, but I'm not allowed to invest in my neighbor's business because I might lose money, okay? So what the Jobs Act is saying, okay, we're gonna start to bring that dam down and start to let that capital flow. Now, the key thing to understand about that law is it required the SEC to promulgate regulations that would describe the specifics of how this is going to work. And the reality is those regulations haven't come out yet. So if we talk about the specifics of how crowdfunding is going to work when it applies to either debt or equity, we don't really know. One of the things I can tell you, though, is if you look at how it works for that we do know of, or if you look at other pathways to raise money under US securities law, it's more complicated than breakthrough energy technology, okay? So if you said, I want to get a PhD in breakthrough energy technology, I would say that's about as much time as it takes to become a securities lawyer who knows how to raise capital for small businesses. And so we've written 2 special reports, and everything I'm going to refer to today is up on a blog post on my blog. If you go to solari.com, solari.com, there are links to all these special reports, okay? The first one is a special report on the Jobs Act and describes what's in the act and what the provisions are. The second one, crowdfunding and the legal pathways to raising capital, list out the 5 ways that a small business can raise capital in the United States now, before crowdfunding, and then compares it to crowdfunding as the 6th. And one of the most important things to understand about crowdfunding is if you're going to raise capital through crowdfunding, the first thing you want to do is understand all of those 5 other options, okay? Because a state option or a Reg D option may in fact work better for your project, okay? And so those are there to be helpful. Okay, is Richard Dolan here? Where's Richard? There's Richard Dolan in the back. Richard Dolan gave me one of the most profound insights I've ever had. It's called the breakaway civilization. Has anybody ever? Okay. From 1995 until 2008 and 9, when the bailouts happened, we watched enormous amounts of money shifted out of sovereign governments, out of communities, and out of pension funds and retirement benefits, and literally disappear into sort of new legal entities. I call it the financial coup d'etat, and I've written a lot about it, and you can see links on the blog. There's an article I wrote called Dylan Reed and the Aristocracy of Stock Profits, and it describes some of that, but I would estimate back of the envelope that about $40 trillion literally left our traditional legal systems and literally moved over. Now, let me tell you how much $40 trillion is. $40 trillion is enough when invested to generate a dividend and interest flow that could finance the US government on a private basis, okay? And it's very interesting, if you look at the publicly traded stocks of the big defense contractors, despite sequestration and cuts in budgets, what's happening to their stocks? They're going up, up, up. You know, maybe a little independent financing there. Richard calls it the breakaway civilization, and I've written an awful lot on what's called the black budget, which is a history of governmental money and sort of secret money funding secret projects, including what I believe is breakthrough energy technology. Now, let's look at where we are now. On one side of this chart, you see what I call the legacy systems, okay? The legacy systems now, instead of, and I'm just picking numbers out of a hat, instead of having $100 trillion in assets and $100 trillion of liabilities, they now have $60 trillion of assets and $100 trillion of liabilities. What are those liabilities? Social Security, Medicare, Medicaid, our retirement benefits. And so what do we have? Whether it's state or local government or federal government, we have a big conversation about, oh, there's not enough money. Well, there's not enough money unless you're counting the $40 trillion over here. I'm always saying, where is the money and how do we get it back? But the budget shutdown is all part of this conversation. The Prime Minister, former Prime Minister of Luxembourg, said on behalf of all the politicians managing this reconciliation of 60 trillion to 100 trillion, he said, we know what to do, we just don't know how to get reelected after we've done it. Okay. But meantime, if you go, I just came from a conference and everybody was talking about how we're bankrupt and the economy is going to collapse and everything's terrible. What they weren't talking about is, okay, where's that $40 trillion and where is it being reinvested? Okay? Because I'll tell you, if you drive through Dallas, it's not terrible. My money management firm is out in Silicon Valley. It's not terrible, it's booming. You know, there are parts of this economy that are absolutely booming because they're experiencing the reinvestment by the breakaway civilization of that $40 trillion. Now, one of the things I believe, this is a theory, is that some of that $40 trillion is going to get reinvested into both crowdfunding and the IPO movement. Why is that? For the last 50 years, the way we financed those legacy systems was with bonds. Government bond market, right? And you hear more and more people talking about the end of the great bull market in bonds. And that's because interest rates have been coming down, 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 down. Now, when you get in a situation like this where you can't make interest rates go down anymore and you can't get anybody to buy any more government bonds, what does it mean? Well, there are two things. Think of it as a house that's got too much debt. You can write down the debt or go into bankruptcy or just, sort of abrogate the debt, or what else can you do? You can do things that make the value of the house go up. In the stock market, it's called a crash up. Now, if you're sitting over here and you're sitting on top of this $40 trillion, one of the things that's happening in the breakaway civilization is they're in the process of moving new technology out, particularly in North America, new fabrication technology, new composite materials. What's the best way to get that technology developed, innovative, tried, applied to the infrastructure? What's the best way to do it? Have thousands of new entrepreneurs try it. So we're coming into a sort of a very unique alignment between, for the last 20 years, we've been at war with the breakaway civilization. Now we're coming back into a unique alignment, and it's going to be very interesting to see what projects they want to finance and encourage. And we're going to talk a little bit about that again. So don't be surprised if you see a large amount of money coming this way, because if you're going to have a crash up in the equity markets, you need lots of new startups. Now, let me explain something that's going to be unique in this process, which is going to apply to every one of you, whether you do donations or you do equity, capital, or another kind of financing with crowdfunding or any of these vehicles. And let me describe my investment model. I went to business school and everybody encouraged you to try and get the highest return to investor that you could. So you put money in a project and you try and get a great return for the investor, and you completely ignore what the investment might do to the environment or the human ecosystem around it. Okay, now that is a very stupid way of financing anything. I'm a great believer that you really want to understand what is happening in the environmental and human ecosystem that any investment finances. If you have big armies and you have a nuclear arsenal, you might not have to worry about that. But for the rest of us who don't have a private army and a nuclear arsenal, we have to worry about that. And the greatest way to understand the risk of an investment is to understand what your impact is on the ecosystems in which you operate. And so my investment philosophy is I want to understand what the return is or what the total economic return of any investment, not just of money, but of time. So if you're working with breakthrough energy technology, you want to be looking at what is the impact of this technology on the people it's going to touch, on the businesses it's going to affect. You want to understand what your impact is on the ecosystem. It's going to be very important to designing any capital structure or marketing plan to do crowdfunding, because A lot of the investors who come in through crowdfunding are going to want to know, what difference does this make to people? What difference does this make to communities? What does it make to the world? They're also going to want to know return to investor, even if it's a donation. You know, what are the gifts I get, et cetera, et cetera. So think of an enterprise as building even a new field, a morphogenic field, and you want to think through who gives you energy, whether it's financial energy or other kinds of energy, and how you allocate it back. And one of the most important things to the growth of a new enterprise, whether for-profit or not-for-profit, is getting those human energy equations in harmony. And thinking this way and mapping out that whole ecosystem will help you. The other thing I want to talk to you about is equity model. I have very strong feelings about equity model, and I will tell you the reason. I worked at a firm on Wall Street that did, starting in the 20s, did a lot with what's called A-share, B-share models, where you divide control from money, and I'll describe that in a second. But I will tell you the reason I think I'm alive today is I had a company that was financed that way, and they could never get control away from me when the politics got rough. So if you're playing in an environment where you think economic warfare applies, and I can't imagine an enterprise being represented in this audience where it doesn't, you really want to think very, very carefully about the control versus money issues in your legal and capital structures. I help finance a very courageous media website called Scoop Media New Zealand. And to help them do it, we did a study of all the media A-share, B-share structures. A lot of the top media companies divide control from investment so that they can protect their editorial content. And that study is also linked from the blog, and it walks you through a lot of the different control versus financial issues in a complex financial structure. And if you're interested, I think it would help you a lot. Okay, there are three parts to any business, and when I say business, I mean enterprise as well. The first is the business. So if you make machines that squeeze orange juice, that's your business. There's the business of the business, and that's the lobbying and taxes and personnel and payroll and all those different issues. What happens to most entrepreneurs is they start a business, and the next thing they know, the people they've hired are doing the business, and they're working in the business of the business, and they hate it. So one of the most important things to these kind of enterprises is how you manage the business of the business. And finally, there's financing the business. Now, I have to tell you, what's the most wonderful way to finance a business? Profits, okay? On the links with, on that blog post, there's a salary report I did with a wonderful guy named Peter Ireland. It's called Startup Financing for the Rest of Us. And Peter is someone who spent a lifetime collecting every way you can start a business without, having to raise money from anybody else. And what I find is the worst thing that can happen to a startup is they get plenty of capital, because in fact you waste a lot of capital. But let's say you do have to go outside and raise capital. There are two ways generally you can do it, debt versus equity, and there are thousands of hybrids. I just did a term sheet for a grocery store where they did debt convertible into pre-orders, basically store credits when they were up and running. But my favorite is equity, because equity creates tremendous alignment between the investors and you. If you have equity in my business and I have equity in your business, then we have incentive to want to help each other succeed, okay? If everybody globally had money invested in Iran, would we want to bomb it? No, you bomb it when you don't have equity in, and then when you get control of it, you have equity, and then you want it to go up. It's all part of the pump and dump. Think very much, if you're going to raise equity capital, about who's going to have voting control and who's going to put in money. And rest assured, you don't have to have them in the same shares of stock. It is possible. As I said, my company in Washington in the 90s, I had voting shares. I controlled 2/3 of the voting shares, and most of the money came in the form of non-voting shares. And there are many different hybrids on that variation, but again, you want to think very, very carefully about that, because it's going to make a very big difference. You don't want anybody having a vote who doesn't have or share with you your mission, your alignment. You want very deep alignment in the equity control. Okay, let's talk about what you're going to need. If you are contemplating bringing in outside capital, the first thing you're going to need is time, okay? This is not something you can delegate to someone else. You will need experts, but you need to have a very coherent plan in which you have intellectual mastery. And as I said, this stuff is as complicated as breakthrough energy technology. So if you're planning on doing this, plan on taking the time to understand what the process is like, how it works, and what the issues are to determine your options and how you go about doing it. If there's one thing I could say in terms of warning, 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 please respect the laws and regulations, okay? I appreciate there's a whole group of people running around the planet who don't respect those laws and regulations, but they have a get-out-of-jail-free card, we don't, okay? And interestingly enough, if you go through those laws and regulations, they represent tremendous amounts of knowledge and best practices about all the things that can go wrong when you start to involve money. And it's quite extraordinary, all the things that can go wrong. You want to have a good CPA and attorney. That doesn't mean you want to delegate things. You need to have intellectual mastery. But a good attorney and a good CPA up front will save you an enormous amount of time and make sure you pick the right pathway and the right legal structure for you. What I've found is that every entrepreneur and every enterprise is unique. You're in different states, there's state jurisdictions, you have different tax issues. So it can get very granular, very specific, very fast, and you want to make sure you have the right people helping you. If you do crowdfunding, crowdfunding goes through what's called portals. Anybody here know what a portal is? It's a specialized market. So Kickstarter is a portal for donations, but on equity raising capital, the SEC has required portals that will be registered with SEC and some will be registered with FINRA. When you go through a portal, they either arrange for you to raise money one by one, or maybe you go into a pool. There are different kinds of portals. And the numbers that are getting started are exploding every day. It makes sense to have a portal, and it makes sense to pick the one that can really help make this a much easier and more understandable process for you. Okay, now, one of the secrets to crowdfunding that I think Wall Street doesn't understand yet, you go talk to the guys on Wall Street and they say, oh, this is little stuff, this is stupid stuff, crowdfunding, it's gonna be nothing. I think they're very wrong. Everybody here know what a morphogenic field is? Okay. The capital regulations have been designed to make it almost impossible, if you're an entrepreneur, to build a field financially that relates to your human ecosystem, your intelligence field, if you will. Okay, does that make any sense? Okay. Crowdfunding enables us to start to have very complex and intimate financial relationships with all the different people in our human ecosystem in a way that makes us intelligent. So let me give you an example. 50 years ago, 100 businesses in a town, they have 100 million of revenues, 10 million of profits, okay? Maybe their businesses are worth 50 million. Walmart's trading at 10 to 20 multiple. They come in, they can take that 10 million of profits, and instead of it being worth 50 million, they can make it worth 100 million, 200 million. That's big capital gains, right? What's the biggest source of political contributions? Capital gains. You can buy a lot of politicians without capital gains. And so we've been seeing people move in on local market shares, so the small companies have been a tremendous disadvantage in this process. Now watch what happens. Let's say I'm the small companies, but I create a portal or venture fund for my place, and all the people who are my customers can, oh, I need water. All the people who are my customers can now invest in my company. That means if they spend $10,000 a year at our companies instead of at Walmart, what happens to their stock? Goes up. They get a piece of equity on their own purchases. Do they get a piece of equity on the purchases they make at Walmart? No. So you can start to build very powerful alignments between people. Let me give you another example. I always get very frustrated when people say, reducing consumption is bad for the stock market. That's a bunch of hooey. Let's pretend for a second we had a venture fund financing our community, and we brought in breakthrough energy technology that reduced the expenses of all the businesses. What would happen to the value of the equity for the businesses in that place? Pow, it would go up. Okay, what if we use the technology to heal the environment? Pow, the equity would go up. So you can build unbelievable alignments, both within networks and within places, that very much translate into a more intimate connection within the kind of human intelligence and fields we're using to create enterprises. Very exciting. Wait, do I go back? Okay, I won't go into it, but it's very, very important before you start, because the last thing you want to embroil is a complex human network and the wrong model or the wrong plan. It's very clear, it's very important when you start that you have a coherent plan and a coherent budget. When I say budget, I don't just mean money. The most valuable thing you'll ever have in a million years is a source and uses of time. Time budgets are the most valuable thing because you'll find that time is your most precious asset. Okay, so let's talk about some risk issues. I want to talk about risk issues both at an enterprise level and a market level. I'll start with enterprise. Technology harvesting. If I'm the breakaway civilization and I take a tiny portion of that $40 trillion, let's say I take $500 billion and I finance thousands of small business startups and venture and small business to prototype my technology, and I have the NSA network listening to everybody, what can I do? I can harvest all their technology. They're my lab, right? Right? Too bad they can't file the patent. I'll get all the information first. I'll file the patent in front of them, particularly if they talk about it on the phone. Okay? So think very carefully, because I will tell you there is no such thing as privacy. When we want to have a meeting at my company, we go up into the redwoods and everybody leaves their technology at home. Pricing harvesting. If let's say you started a company, you were smart, you kept your technology secret, you filed your patents, everything's working. Now all the big guys come in, they want to buy your company. Okay? Let me give you a piece of advice. Never discuss the price you will take on the telephone. Discuss the price you will take when you go up in the redwoods. I had a friend once who called me in the 90s and he said, "You're not going to believe this. My brother just went to work for a company that specializes in helping companies who want to go to the next level. They're a phase 1 company. They want to become phase 2. So they help them either do an IPO or do a merger deal or joint venture." And I said, "Really, how does the economics work?" And he said, "They have a deal with the big investment banks. They go in, they get the information, and then they do something to hiccup the company and they can pick it up for cheap. So they make their money from the other side." Okay? No, but it happens all the time. Watch a movie. There are 2 movies I want to point out. At the Solari Report, I've discovered that Hollywood has taught us everything. So watch a movie called Antitrust and watch a movie called Startup.com. It's movies that give you 2 examples of how that works. If you want a full spectrum story of every possible enterprise dirty trick you could ever think of, if you go to the Dylan Reed story, again, that link is in the blog post. At the back of the Dylan Reed story, there's a resource center, including a website that's all on Hamilton Securities, which is the company that I had in Washington. We had software that would allow entrepreneurs to see the sources and uses of all government credit and money by place. The mortgage bubble couldn't have happened if that software was accessible. And it was seized by the Department of Justice, kept under court control for many years. By the time I got it back, the most valuable pieces were gone forever. I spent 11 years litigating and spent about $6 million, but I discovered just about every trick you can use on a company. And if you go to that resource center for Hamilton Securities, there's a wealth of information about some of the tricks. We have one piece that's called the SWOT list, and it lists litigation, audits and investigations, physical harassment, smear campaign, all the various dirty tricks. So if you want full spectrum dominance, there it is. Okay, so let's talk about the monetary dirty tricks, and these are going to be probably more important to you as you're navigating this environment. The chart here is called the Shiller PE. Does everybody here know what a price-earnings ratio is? Price-earnings ratio is the ratio between the earnings of a company and the valuation of the stock. And the Shiller PE is one measurement of the overall price-earnings ratio in the publicly traded stock market. This one is the S&P 500, starting in 1890 and coming until recently. Now we see 2 huge spikes in the Shiller PE where the price earnings ratio went to the moon. Anybody know what those two spikes are? The Roaring '20s is right here. And what's this? The tech bubble. So what are those two spikes? Those two spikes are during a period when there is an explosion of new technology. Right? Well, or something. Okay, so if we have the breakaway civilization with $40 trillion, and we know that technology is exploding outward, there's lots of new technology happening, what could happen? We could get another one of these. Okay? So let me tell you a story. Esther Dyson used to have a conference for all of her subscribers, and I was out at her conference in 1997. And there were just tons of information technology entrepreneurs making wonderful presentations. And they would make a presentation about their wonderful product. And it was clearly very clever and very wonderful, but there was no way a busy family with 2 kids and holding down jobs would ever use it. You know, it was neatsy keen, but it really was never going to translate into a business or enterprise. And maybe to get their neatsy keen product off the ground, they wanted maybe $25,000 to $500,000 of financing. The place was rife with venture capitals who were willing to give them $10 million. You know, and you literally hear guys saying, I don't need $10 million. The venture capitalists would say, you either have to take $10 million or there's no deal, okay? And I'll never forget going down to lunch and thinking, this is so strange. I can't figure out what is going on here. Well, what was going on here is what's called a pump and dump. They were creating lots of vehicles to run up in value, take public, sell into the pension funds, take the money, and shift it off into the emerging markets or space or wherever it went. But part of the way they financed that $40 trillion steal, if you will, was with pumping and dumping the stock market with the telecoms and the internet technology stocks, okay? The same thing could happen here, which is why if you raise equity capital, it's very important to me that you have the voting shares and know that when you bring in money, you have no idea whether it's somebody interested in doing that. Because in venture capital, if I finance 30 companies and one is successful, that one can make enough money to make that whole portfolio successful for me. So I can afford to finance a lot of losers, and if I can just get a couple of them sort of pumped up enough so that I can flip them back into your pension funds, then I can make a lot of money, not only prototyping new innovation, but I can make a fortune on the fraud. So I can translate $100 million into $1 billion. You know, so if this wave happens again, just be careful because everybody's going to feel good. You know, I'll never forget in 1997, everybody in Silicon Valley were just, we're going to save the world. It's going to be fantastic. We're so thrilled. You come back now, the whole place is run by the defense contractors. Okay, so we need to be careful of, you know, sort of what's coming in. Okay, so how do you avoid that? It is invaluable to have support locally or in your network. Okay, you're working on projects which are important and useful to people. Start building alliances with the people whose problems can be solved with what you're doing. Okay, and the more you can build networks locally and in your network that may not look like they have a lot of money, but they have problems to be solved. And if you build the right human ecosystem, you build the ecosystem that can protect you from all that silly business, okay? It pays to have friends. I'm always telling people, when I got targeted, if you've ever seen the movie Enemy of the State with Will Smith and Gene Hackman, one of my favorite actors, I played Will Smith in real life. So one day I'm rich and successful, and the next day, you know, my own family thinks I'm a serial killer and I'm, you know, being run off the road by crazy people and, you know, blah, 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 blah. And one of the things that happened was the sort of forces arrayed against us cut off all of our sources of capital, our credit, our money. You know, we were making about $1 million a month in revenues. We had about 800,000 expenses. I was very wealthy. Suddenly, boom, every door shuts. You have no credit, blah, blah, blah. I had given or lent $250,000 to family and friends. Everybody got together and said, well, I guess she needs it back. That $250,000 came in over the next 6 years, and that's one of the reasons I'm alive today. Okay? And it came from all sorts of people who you wouldn't think are important or you wouldn't think are wealthy, but that network was very powerful, and you will see that again and again and again. We don't need, I mean, if you take the time we spend watching TV in North America, the money we spend on hard narcotics and the money we spend on lottery, we have enough money and time to reinvent the entire economy. We don't need Wall Street in Washington, okay? If you are going to, oh, I love dogs, let them stay. So if you're going to make a mistake, here's the mistake you're going to make. This is the biggest mistake I see anybody make. It's very easy to make. Every time I think I've got it figured out, I make it again. And that is, right now we have two systems on this planet. One is for centralization. It's centralizing political and economic power. You know, one of my nicknames for it is the tapeworm. And many, many, many of us have tapeworm dreams. You know, we want to be on CBS. We want an award from Harvard. We want big money. We want our company to be big and successful. You know, that desire is what a friend of mine calls tapeworm dreams. That desire hooks us and it gets us into more trouble. And I can't tell you, over the last 20 years, as I've tried to be a member of the pro-decentralization team, what I tell people is, you know, the way I bless you is I associate with you, and then the tapeworm comes and buys you away because you have tapeworm dreams. Sort of one way the tapeworm protects me from those mistakes. You want to make sure whoever you are doing business with or associating with is truly in deep alignment with you about decentralization. They don't pine for the treats of the tapeworm. They don't pine for an award from Harvard. They don't pine for getting on CBS, blah, 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 okay? And you'll be surprised how many people have those deep desires. Okay, the second thing I'm going to tell you, this is the other mistake I see all the time. Please, when you start a company, you want to think big, but you want to think small, okay? And I see many, many people thinking big. I don't see enough people thinking small, okay? Small is, at the end of the day, if you're going to start an enterprise, that enterprise needs to serve people, okay? And the question is, can you serve one person well? If you can, then you can serve 2 people well. Then you can serve 4 people well. Then maybe you can serve 8 people well. And it can go on from there. That is the authentic pathway in a market economy. And one of the powers of crowdsourcing and crowdfunding is it allows us to do that. It allows us to find and reach each other in very low-cost ways. But you want to think small, because I can't tell you how many people I know, how many inventors say, oh, this is going to change the world and I'm going to take on the big boy. No, you're not. Please don't. You know, if I hear you say that, the money people are going to run the other way, because you can't make money fighting. Very rare can you make money fighting, maybe on Shark Tank. So think small about how can I serve and how can I be useful. I believe he's talking now, but one of the people who I've heard wonderful, who really understands this, is Mark Dancy. He understands a lot about taking a very powerful technology and doing one little thing that will make money, and that will help you finance and do your next thing, and that will help you make more money. It's sort of a net energy plus cash flow model. So don't be afraid to think small, because you know, all great ideas are small to individual people. And my neighbors, they want a toaster that they can turn on, and if there's a problem, they can call Bob, and Bob will come and fix it. Because if Bob won't be for it, they're not buying it. I don't care how good it is. They don't want to know from the details of your technology or how much you've sacrificed or any of that stuff. They just want a little toaster they can turn on. Okay? So the question is, how can we help them? How can we reduce their poverty? How can we give them energy? How can we make them more coherent? Okay, I'm going to be at the conference until I'm leaving Sunday morning. I'll be here all day today. I'll be here all day tomorrow, except during lunch. We have a lunch for Solari Report subscribers at Sherpa's restaurant, so I'll go off campus for a short period. Feel free to ask me any questions. If on the links that I've posted, if you're attending this conference and it requires a subscription to the Solari Report, just send at communicate@solari.com. Just send me an email saying, I'm attending the GlobalBEM conference. I'd like a complimentary subscription. We're happy to send you a complimentary subscription so you can access any of the links that are behind the subscriber only. I need your email address and your name and your telephone number in case there are any problems, okay? And I'm happy while I'm here for the next 2 days to answer any questions you have. If I know the answer, suggest where you might go to get the answer. Again, there are more links than you're ever going to want to read at that blog post, so hopefully that will take care of everything you have. And finally, ladies and gentlemen, I want to thank you very much for the opportunity to speak to you today. It was a thrill. I got to go to Holland last time. It was such an amazing experience that I said, you know, I can't miss this one. So I very much appreciate the opportunity to be here and for all of you coming because it makes the possibility for us to have this conference. So ladies and gentlemen, thank you very much. Lunch!